Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, and joining me from Dallas, Texas is Mike Traeger for today. Mike gets to join us occasionally on these Friday shows. He'll be with us for the market overview and all that kind of stuff on today. But then he's got to cut out and get going. Where are you going anyway? Well, you don't have to tell me where you're going, Mike.
I got some errands to do, so I gotta get them done today.
Understand that. Well, welcome everybody. I want to remind everybody that with the Active Trend Traders, what we do is basically we provide a lot of great training, and so all materials that we present are for training purposes only. And traders, when you're being introduced to any type of new trading method, please paper trade it prior to the risk of your own personal capital. Got a lot of stuff to cover today. So I want to remind everybody, for the premium members of the Active Trend Trading system, we just entered into a review and sessions on the use of candlesticks to improve entries and exits. We concluded with session 1 on Wednesday night, and then along with a mid-year review, we'll go into session 2 on this coming Wednesday evening. And remember, guys, that those training sessions are available on the website, and you have access to those basically forever, or until, well, for as long as you're a premium member. Next Saturday, July 18th, I'll be presenting at the San Francisco Money Show. Be presenting on wealth building and income generation with index ETFs. And so I'm really excited about that. It's going to be downtown. I think it's at I want to say the Marriott, but here's the address of where we'll be at. And they gave me a dawn launch on next Saturday, so I'll be presenting starting at 8 o'clock Saturday morning. So I'll be on the BART nice and early. So let's start digging into it. This has been one heck of an exciting week in the market. This week, as we were talking last week, we were basically saying, hey, the market's finding lower lows. What were the issues? Greece, interest rates, margin debt, overvaluation. Well, roll it forward a week, and what do we have? We found the market's finding at least what appears to be maybe, possibly, could be a short-term bottom, and then bouncing from that, doing a little bit of a rally. But the big question I have, Mike, is it a sucker's rally? And we've been almost in a situation where you buy the close, sell the open, and for longer term traders, that's a toughie. Go ahead.
No, it's so unpredictable and so event and news driven. One day Greece is in, the next day Greece is out. So one day the market's up, the next day the market's down. And I don't know how you apply in this kind of an environment that we've had this week, and any kind of strategy that makes sense, unless you go down to 30-minute or 60-minute charts and and try to play with those.
Yeah.
We've had these huge range days, and totally dependent on what the headlines are.
Yeah, the one thing is just, and for somebody who is still gainfully employed and not trading for a living, a lot of times sometimes it may be a great time to just kind of like stand back, let the dust settle. We talked about that a little bit in the traders report over this past weekend. It may be just time to stand back, let the dust settle, because as you said, Greece, a couple of new things that got added to the mix, I think, this week is China. We saw China coming, and you and I have been talking about that when it rolled over, oh gosh, what was it, almost 2 months ago?
Yeah, well, it really started rolling over. We started talking about it about 2 months ago. And it was still on the way up, and there was a little bit of a retracement, but it really started selling off in earnest about 3 or 4 weeks ago.
Yeah, and then earnings, the early we're on the cusp of earnings and getting going. Those of you who follow stocks like CUDA got hammered. I have not looked at a chart of CUDA today, but after hours they were down oh gosh, about $7-8, and on a $34-35 stocks, I think it was up about 36-37, but anyway, it dropped down to about 30. I have not seen if that recovered because I was working on some other things, but earnings are starting in earnest and will run for approximately the next 6 weeks or so, with a few stragglers reporting after that. And so this months of July and August could be exciting and very volatile times. So what else are we looking at? Here's where we were last week on one of the indicators that we like to follow is the percentage of stocks above the 20-day moving average on the NYSE. And as you can see, last week we had bounced down here. We were rambling around, and so what happened? As a matter of fact, we got an early warning alert on that, but what happened? Well, it undercut and dropped further. And I put this up as a full year's chart, folks, so you can see occasionally on this particular indicator you get periods like this. This was back in October. And it was just the market had a huge sell-off going into October, and then it chewed around here on the bottom and kind of just macinated a little bit. And so one of the questions that I'm looking at is, are we getting a similar type of thing here where we'll get a bounce up, but then bam, right back down? We shall see. I believe, Mike, that if the weekend has good news on Greece, we may get a little bit more of a continued rebound. But at the same time, even with good news on Greece, and even if the Chinese government's infusion of cash into their stock market, those can sometimes be just really short-term blips. Don't you agree?
Yeah, I do agree, and I do agree if there's good news mainly related to Greece over the weekend, we could see a continuation of this rally on Monday. If there is bad news about Greece over the weekend, which is certainly possible, I don't think it's likely, but it's possible, I believe we'll have a huge down day on Monday again. So that's just kind of the environment that we're in. As far as China's concerned, what they're doing now to stop the carnage in that market is not sustainable.
Yep.
That sell-off will continue at some point. That's a situation you're not really dealing with a free or an open market. I mean, I think the most recent reading I've done as of this morning, I think about half the stocks on the Shanghai Composite Index have halted trading.
Wow.
They just, you can't sell them if you can't trade them. And, those are the lengths that the Chinese government is going to. And, I mean, how sustainable is that? There's even reports that, the local police in China have been authorized to search for and even arrest people who have been selling stocks and shorting the market there.
Wow. That's amazing.
Well, it's happening. These are news items. So, I mean, you can stop the selling temporarily by putting those kinds of measures in place.
Yeah.
But,
well,
how sustainable is that really?
Yeah, and taking a look at it, because the Shanghai, it's down about 20%, is it not, from its highs?
I think at least. I mean, it was down close to 30% until like the past 2 days.
Yeah, and anything past 20%, guys, is considered a bear market. And and that's one of the things that I'm looking at, Mike, is I think that Greece is noise, but China is has the potential of making things really ugly, and that could be contagious, because those of you who follow the Nikkei, the Japanese index, earlier this week, it got whacked. And I'll show a couple of charts here shortly of those. But yeah, they just got whacked. Let me
Yeah, and with China, you can consider where the fall, where the sell-off is coming from. I mean, there's a market that in a little bit over a year, the indexes had run up about 150%.
Yeah.
And now you've come down a little bit off of that, and I haven't done the arithmetic, but if you put it all in perspective, that market still in a little bit over a year is still up about 80% or something like that. I mean, the hand-wringing over it is ridiculous, in my opinion, and a real sign of desperation on the part of the authorities and the government there.
Yeah. Hey, I want to backtrack just a second. What do you think the bad news would be for Greece to impact the market coming out of this weekend?
Well, the bad news would be, I mean, just to get everybody updated on events, and I only follow it as a matter of curiosity because I kind of like to know why we're seeing what we're seeing in our U.S. markets. I think it was overnight last night that the Prime Minister of Greece went back to not the IMF because they're done with the IMF, but they went back to the European Central Bank, and Greece still has the ability to request bailout or loan money.
That's correct.
From the European Central Bank, but be done with the IMF. So Greece is basically, they're getting pretty desperate, and they've gone back, and the Prime Minister has said, look, we're willing to give you most of what you were offering us before in exchange for a 3-year, 50 billion euro loan.
Yeah, yeah.
And so the deal that was on the table that the Greeks were rejecting a week ago,
yeah,
and they had that referendum vote on Sunday where the people of Greece basically said, no, we're not going to accept those terms. Well, against the wishes of his public, the Greek Prime Minister has basically gone back and said, you know what, that deal is mostly okay. We'll take it.
Yeah.
Okay, that's what's happening today.
Yeah.
So if there were going to be any, bad news over the weekend, it would be, the European financial ministers basically saying, no deal, that deal is off the table.
Yeah. Well, yeah, exactly. I mean,
and we don't accept your proposal, or we need you to do a couple more things that is not in your proposal today. And if no deal is finalized over the weekend, I guess that could be bad news, and we'll see the downtrend resume on Monday.
Yeah.
That's what's going on there.
So, yeah, I know it's really some of the things I've been reading about what's going on over there. I mean, like this past weekend's vote was primarily just an issue. I think it was just basically, hey, let the Greeks feel good about themselves and do their saber rattling for a little bit, but the one major thing that I think is an issue with Greece is if they thumb their nose at the European Union and say, forget it, we're not going to pay you guys back. Well, then if some of the pigs, if you will, Portugal, Portugal, Italy, Greece, Ireland.
Italy, Ireland, Spain.
Yeah, and some of those who are also probably deep in debt to the more productive countries in Europe. And I'm not saying that as a slight on anybody, but there are certain different lifestyles over there. If they in turn follow Greece, well then look out below, because what happens then if that goes contagious across the world where people basically are just walking away from their debt, it could be a very interesting time going into the summer and fall months.
Well, and then not even the summer and fall months, because let's say Greece were to just go away. I mean, Greece just can't cut a deal, and they're out of the Eurozone, and everybody, the reason this has become such a big deal is the domino theory that you were just, talking about.
Yeah.
And Greece is the first domino to go. Well, what goes next? I mean, Spain is the next big one. They're almost in as bad shape as Greece. Only, Greece has been taking the headlines. And but Spain's a much bigger deal. But that's not going to happen in a matter of a couple of months. I mean, that if that's going to play out and those dominoes start falling over, I mean, that's a 1 to 2 year process.
Yeah.
Maybe even more.
Yeah.
And the reason everybody's fighting over Greece is because they're afraid of the dominoes starting to fall.
Yeah. So, I mean, personally, I think it's going to happen on May 16th of 2016. But, you know, no, I'm only kidding, folks. That was just, it's one of those things where we really don't know. But things are, you know, there is a lot of there's not a lot of silver around the clouds these days. Anyway, here's
there's a lot of bad stuff going on, and if you look back at past periods of financial crisis, you start to see a clustering of events happening at the beginning of a crisis, and certainly we're seeing a cluster of events going on now in real time.
And so, hey, here's, I left this chart in from last week just to kind of like as a fresher and a reminder of what we're looking at. And as you can see, in some of these market tops in the past, you'd have a flattening out and then a rollover, a flattening out, then a rollover. And so the big question is, we certainly have a flattening out going on in this is the S&P, going on in the current market, and we have come back down. I think this is a weekly chart, and I've come back to this, you know, this is a 35 week moving average. I don't use that one per se, but as you can see, that is very close to the 100-day moving average, and prices this past week have been down around that area. So I think this chart is still in play. I still think that we may be watching a rounding type process now that we're flattened out. If we start hammering down this way, then I'm not going to say it's going to happen this year, because we could go this way for another year or plus, but eventually we're going to get some more drastic downturn, because, you know, let's face the fact, it's been, gosh, we've been talking about this a lot, Mike, 3.5 years since we had the last 10% correction on the S&P.
3.5, 4 years, something like that.
It's due. So we're going to go hop over to the charts. As of 9 o'clock this morning, the Dow was down for the year. A little bit less down than it was last week. The S&P is basically up almost 1%, and the NASDAQ and the Russell have been stronger than the S&P and the Dow. But, and as you can see, this past week has almost been a wash, has it not? I mean, look at here's where we were last week, and here's where we are this week. So we've had a lot of movement and have gone nowhere. So let's take a look at the S&P and see what we're seeing here on the daily and weekly chart. At least we're getting, you know, one of the things that we have been waiting for is for the indicators to start showing some positive divergence. And we're getting a little bit of that. We've got the momentum on the daily chart starting to turn back up. Looks like we, you know, still on a weekly chart, the true strength indicator is headed down, and if we close today where we are, the momentum has dropped below the zero line, which often means that there's going to be additional downside. What is some of the things that we have been hammering on? I want to do one thing, Mike, before I click over to the other. Oh, come on. There we go. I want to... Since it is in play now, I want to bring the 200-day moving average back onto the daily charts. And as you can see, the S&P for the week came down, has broken through the uptrending channel line, but now it has reversed, you know, off down from slightly below the 100-day moving average and has built back up. Now, will this spring load on up and come up here to retest? One of the things that Mike and I were talking about in some of the midweek market sanity check is what are the fibs telling us? Where could, if this is a relief rally, because clearly we have a at least short-term downtrend in place for the S&P, because we have a higher high, or the high, the low, which makes a lower low down here, a lower high, and now a lower low. And so no matter how you cut it, that is defined as a downtrend, at least in the short term. So where might we bounce from here? since we now have a short-term bottom in place. Well, we've already bounced up here to the 38.2 level, and oftentimes on this Fibonacci's, you'll look at, and Charles Dow defined this way back a long time, that stocks, when they tend to bounce either out of an uptrend or a downtrend, will tend to retrace somewhere between 1/3 and 2/3 of the move, the preceding move. And so where might it go? Well, it already got up to the 1/3 retracement, approached the 50% retracement earlier in the week, and hasn't come close up here to the 2/3 replacement. But it's just something to keep your eye on, because it's phenomenal, Mike, how those Fibonacci's levels can turn out to show some of the hidden levels of support and resistance. Don't you think?
Yeah, no, absolutely. I mean, I've long ago stopped believing in coincidences with this, with price action on charts, and even, with the fibs you just drew in there, you can see that, expected retracement levels start running back into the area where, the shorter and intermediate term moving averages, like the 8 and the 20 are.
Yeah.
And then those are your fib retracement levels also. I mean, I just don't believe that any of this stuff is coincidental.
Yeah. And so I highlighted early in the week in one of the market updates that we may be, what may be underway also with the S&P and the other tracking indices that we use for the active trend traders, is just seeing a lowering of a trading range. That goes along with the concept of a rounded top, where it will go basically bounce up to a range, bounce around in that for a few weeks. And in this case, the S&P, we bounced to a higher level, bounced around in it for a little bit, tried to bounce to a higher level, but now we are seeking what I would call a lower, range to bounce around in, because we at least clearly have defined now in the S&P where the buyers live and where the sellers live. And if you look on the SPXL or the UPRO, you can plan trades on this, but again, it's one of those situations where you buy the close, sell the open, or sell first thing in the morning, going away. And that's what I'm seeing there. Roll over here to the NASDAQ, the NDX, NASDAQ 100. What is it telling us? I think it was a little bit stronger. I don't know if you consider it stronger or weaker. It's this hammer, which is not a really good quality hammer, because it didn't happen. Yes, it happened at the end of a downtrend, but it didn't kind of like stand out by itself. It was, but we have to categorize it as a hammer, and so that hammer is still in effect for a reversal signal. However, that long lower wick, as you can see, is showing where the buyers are. They're down here, and where the sellers are. And right now, the sellers are hanging around on this kind of like trend line here, where it's getting right up above the 8, but then it's being challenged, and this is the 100-day moving average here. We did not come close to the 200-day moving average, as you can see, and so it's a little bit stronger than. What do we have going on the weekly chart? We've still got things pointing down, down, down. A little bit of an uptick on the weeklies, on the dailies, with regarding the true strength indicator. But as of this point, and we talked about this a lot on Wednesday night, about this particular move here, which is a positive divergence going along with a retest of the previous lows. And so that's one of the things that we are patiently waiting for. And it looks like it doesn't look like we're going to be disappointed, but it's just not here yet. Mike?
Yeah, we did talk a lot about that on Wednesday night, and like I said then, you don't see it every time, but it happens all the time. And I was even, if you wanted to, just to illustrate the point that particular point again on an individual stock, and it's not one that I have traded myself anytime recently, unfortunately. But it is one I occasionally look at. And
Which
if you
one?
want to go to a daily chart on Tesla,
Oh, yeah, I love Tesla.
which I know that you certainly have traded.
Yep. Traded that a lot. Traded that
Yeah.
a lot last year.
So let's go back on the daily chart of Tesla. Let's go back and look in March. And yeah, right there where we've kind of put in, you know, sort of a bottom at a previously established support level. And then a couple weeks later, you know, later in March, we're putting in a new sort of marginally lower bottom.
Yep.
But look what's happening with our indicators at that time. And had anybody been astute enough and been watching this at that time, I mean, you get, you know, a positive, you know, candlestick, these two consecutive prominent lower wicks, a close above your 8-day EMA, and, you know, you're off to the races. But your first clue, your heads up there is, you know, sort of a triple bottom almost with, you know, very market positive divergence in the indicators. And I just don't remember all the years I've been looking at charts now. I mean, I can't recall an instant of not seeing these things follow through properly.
Yeah. One of the things to remember is oftentimes we as traders, we want this. Okay, this is where it's making a brand new low. I'll run this back a little bit and you can see it where it's making a brand new low. Actually, that was a good positive divergence there too. But anyway, it's making a brand new low. This would probably be a better one. The indicators have just gotten down to for the first time to their new lows, and it did a rebound. But that, from our study, what we found is that isn't necessarily the best time to be trading, and it can be prone to losing, and or not losing, but whipsaw is what I'm trying to say. And so it's really interesting, but yeah, that is very evident there. And, you know, it's one of those things where, you know, if you take this trade, any kind of weakness as it approaches a level of, you know, defined resistance, such as a moving average, or puts in a candlestick, those are the reasons to be getting out, taking your little bit of profit, and just waiting, because the patient, even though it took a little bit over, this is from January until the end of March. So, you know, for almost a 3-month period, you had to wait. But for those who waited and let the setup happen, they were richly rewarded, because this is one heck of a move on Tesla.
Yeah, that was over a 50% move in a matter of like 3 months or so.
And so, there we go. So what is the Russell doing? The Russell, there was a level of support down here between about 1225 down to about 1210, and that is still intact. But it put in. Now this is a much better hammer because the downtrend is much more defined. So it was working within its hammer and slightly breaking out today, but will that continue? You know, will that happen? We made a slightly lower low here, and so again, it gets back to what are we looking for? What is the at what point can we do a trade that'll have a little bit higher probability? And earlier in the year, you see this over here. This is a nice little positive divergence, and away she goes. But again, it's a waiting process of several weeks for the setup. And so the problem oftentimes we traders have is we want it, and we want it now. We should go on the street and say that, Mike. What do you think? Traders revolt?
Well, for those who are old enough, there's an old Doors song from the 1960s where that is a lyric, a line in one of their songs.
Yeah. What? When do you want it?
We want the world, and we want it now.
Yeah. And so anyway, so that's what's going on with the Russell. I want to throw up a couple other charts to show some other interesting things. And this is the Nikkei. This is the futures of the Nikkei. Here's my charting. And this is where I was talking about. It had this huge sell-off on Wednesday, whammered down, and now is in the process of going up. Now, Mike talked about, and I talked about on Wednesday night, is that when you get these bounce ups, be watching those, because oftentimes it does just the inverse of what it did when it was going up. And you look for these negative divergence, and you see a great one here on the Nikkei. Made this high here, went on to a higher high, and eventually, bam, it lost it, dropped, came back up a little bit, never could reclaim, and then finally a sell-off. And then the ETF that emulates the okay, where are you hiding? There we go. That emulates the.
Well, it's kind of what are you looking at? Well, FXI is sort of a proxy for China,
for the
Shanghai Index. Yeah. Not a perfect proxy, but it's the best one that we have to trade here in the U.S.
Yeah. And so as you can see, we started talking about this as it was running up here in, actually when it was running, I think about here and here, early part of April. And then we started, made a couple of trades in my personal account, did okay here, but unfortunately, I didn't get to take advantage of the whole plunge down to the bottom. Now, on a weekly chart, what do we have shaping up here? Yes, it is a hammer, and a good hammer, but at the same time, prices can wallow around in here for quite some time, and we have broken some significant levels of moving average support, in that red line there is the 40-week moving average, which translates approximately to the 200-day moving average, which is right there. So we are right now below the 200-day moving average, and as a proxy for the Shanghai, let's see how far. Right there, it was down 26%, and currently it is down about 19%. So it did qualify to go into what's considered a bear market. Will the government's efforts help? I don't know. So
there's another, if you want to show it, I don't see volume. Oh, no, wait, I'm sorry, my mistake. I do see volume. Looking down at the volume panel on the daily chart of FXI.
Yeah.
And, we had these two big, down days, these big gaps down on Tuesday and Wednesday.
Yeah, yeah.
And just a little tip for the people, looking in, you can see, those two big volume spikes on those 2 days. And very often when you have a market that's either, selling off to this extent or maybe going into, a parabolic, upside move, you start to see volume spikes like that after a period of movement. And it very often is an indication, yeah, there you go, of what we call climax selling or climax buying. And we certainly had evidence of some climax buying near the top, although not at the absolute top, with evidence here for a couple of days of climax selling.
Yep.
And, price action had really gotten way removed from really far away to the downside from the moving averages. Given the volume spikes, the evidence of climax selling, the Chinese government actions, this little bounce here the past couple of days, which may be nothing more than a dead cat bounce, highly predictable.
Yeah, and I mean, a lot of times, folks, you talk about a capitulation to the downside. Well, this was kind of a capitulation to the downside, and so it has had a nice little bounce. But is it dead? Is it just a dead cat? Right now, as long as it's below the 200-day moving average, I'm gonna call it a dead cat. And so, but it may do something constructive in here, or again, it may just wallow around here between 44 and 39. But this is a capitulation to the upside. We don't talk very much about capitulations to the upside, Mike, but we probably should. So, wow, you guys, Mike, we're covering a lot of good stuff today. And
I just don't believe the Chinese can keep arresting people and keep that market up.
Yeah. Did you say that taxi drivers are arresting people, or the police? The police are arresting people. Yeah. And so it was so funny back when you talked when you were talking about when it was topping. It was basically it was the old adage of the taxi cab drivers in China were talking about the stocks they were buying and all that kind of stuff, which is oftentimes a direct indicator of when things are going to fall apart. So
yeah, right around that time there was a photograph going around on the internet, and the photograph was taken of a street vendor somewhere in China. He had a fruit stand, a banana stand, and while he's sitting there with his bananas around him, he has his laptop out, and you can see in the photograph that he's got a stock chart on his laptop next to his banana stand, and he's day trading stocks as he's waiting for people to come buy bananas.
Wow.
And that was going around about 2 or 3 months ago, but it was one of the things that caught my eye, and I said, man, if there's ever an indication of an imminent top in a market, I mean, there it is. And sure enough, within a couple of weeks, that market had topped out.
So we just want to remind everybody about our pillars that we try to work off of with the active trend trading system. Pillar one, after what to trade, we only look at top quality IBD stocks and ETFs, when to enter, when to exit, strategies to use. We have now 3 focal strategies that we're focused on. And here's where we're at with regarding we kind of survived the downturn in the market fairly nicely, maintain our upside for the year. And here are the 3 strategies that we're focused on. Our 80% of what our funds will be allocated to stocks, index options, then 10% to options, and 10% to wealth building. And they're all based off of the active trend trading triggers. Our wealth and income are our strategy number 3. Here's a trade that I started about 10 weeks ago. I bought the S&P January 2017 210 put, paid $21 for it. I bought 5 of them. And basically, here's what I've been doing on a weekly basis of selling premium against that. We closed out basically the options that we had this week. And so far, we've been averaging per week about $256, 2.4% on this amount per week, or approximately a little bit over $1,000 a month. Now, this varies by week to week, but I'm really glad to report that while we've only had about 13% of the time go by, because there was about 90 weeks of opportunities to trade. About 13% of the time has gone by, which should equate that I should have paid for at least 26% of the value of that amount if I want to hit my 100% return on this. And we're sitting with a return of about 25.5%. And I just made a couple of refinements, as some of you may be aware of, on the strategy number 3. So right now, currently, strategy 1, no new long triggers. Strategy number 2, no new long triggers. And strategy number 3, we had a little bit of a hiccup week before last, but this week we have started to pick up, and we already have in place about $540 for potential earnings next week. Our early warning alerts, we have an active alert online open, but we're waiting for a setup. Just as a reminder, if you would like to become an Active Trend Trader member and you are listening to this video, we do offer at a 40% discount the Active Trend Trader membership. And you can also join with the early warning alerts, which is a separate service which is just identified for index ETFs. Gary, did you not see the spreadsheet? Let me go back here. There, can you see that spreadsheet? Okay, I'll leave it up for a second. So if you want to take a look at that. Okay, there you go. And that will be on the recording. And so anyway, Mike, that's all I've got for today. We'll take a look at some stocks. I know you got to bug out and go do some errands. Mike? Mike is gone. And so, okay, hey, remember to keep the egg growing and trade wisely and profitable. For those who, I just want to highlight one quick thing here really quickly, and that is my YouTube channel, which is Market Tech Talk. I have started putting on, and I will be continuing to do this, maybe 1 or 2 a month, maybe, but these tech tips, and what this is just a quick tech tip of how to buy. This one was about how to buy the lows. And the comments that I've gotten back for that are that it's really good, but I try to keep it really nice and short, somewhere under 10 minutes. And so, I'm striving to cut it down and stop being so verbose and get it down to 5 minutes. But I'm in the process of working on one that is going to be talking about making strategy number 3 more of a fire and forget type of strategy. And I think you'll find that interesting. And we will be also posting that on our website, which is activetrendtrading.com. So let's look at some charts. So, okay, we've got some nice stocks to look at today. Let's start here, XBI. Okay, for biotech, okay. Let me put this up here. Okay, yeah, Gary, this is looking actually, continuing to look pretty good. It's got this long-term trend that is clearly still in place. It pulled back to the, on the weekly chart, pulled back to the 8-week moving average, which is approximately the 50, somewhere around that. We can see that as of right here, made a nice little bounce. It's definitely holding up better than the market itself. There was a breakout here, and which has been retested a couple of times. We still haven't broken out above that. So looks like it's going to be in a testing period here. May break out, may not. But definitely holding up better than the markets itself, the individual markets. What was the other one you had? IBB. I know you like the bios. Okay. Yes. It's very similar. One of the things that I would it's not a recommendation, but something you may want to take a look at is the shape of this chart is very much like the chart, the chart of the XBI. So when you have 2 charts that are basically moving in the same, with the same personality, you can save yourself some research time or analysis time if you just focus on one of them. And so I know that, so that's a thought, because they look like they are kind of tracking the same thing and possibly could be tracking some of the same companies. FireEye. Okay, FireEye basically broke out of this little flag or out of this little pullback consolidation period. Prices have not kicked in yet to take it above. I think that's partly market weakness is holding it back. And so I would be watching to make sure that it held the 50 and it's going to run into resistance here at about the $50 level, not the 50 moving average level. Looks like it's going to have some resistance there where it tested here. And so it looks like it may be getting in gear for a potential move. It's getting a nice bounce here. And so the thing that has been missing on many of the stocks I've been looking at is that buying volume has remained low, which is not a healthy sign. Okay, let's see here. BDSI. Yeah, BDSI, we put that out on the report last night. See what BDSI is doing. BDSI has come back down into a support zone, and we're basically just waiting for things to turn back around. It too, as you can see, as the volume starts to slack off, that's something we want to be in. It's telling us that buyers are not jumping. They're not jumping in, with both feet. They may be dipping their toe, but that's about it. But we have some pretty good indications here. It's popped up off of the 100-day moving average after a spinning top doji here in the process after it put in a hammer. So those are good reversal signals, but this is a newer low. And so again, if you can take the time is wait for those little low setups, like here was a low, popped back up, came back down, positive divergence. Similar type thing. Look for pop up, drop down, this to go like this, put in positive divergence, and you may have to wait a while. If you take, one of the things I like to do, here's just some, if I do buy that first drop, and I do this in my personal account, if I buy that first drop and it runs up here and kind of looks like it's stalling, sometimes I will sell an at the money weekly, and that's why one of the reasons why I like trading weekly stocks with weekly options is I'll sell an at the money covered call, and as it drops back down, at least that helps me live with the potential downturn a little bit more. And so, okay, let me get rid of that. Let's see, what are we looking for? I don't know if you guys can hear that or not, but my grandson just got here, and he wants his diaper changed. Diplomat Pharmacy, yes, continue to proceed up. When the market is showing some weakness, this is one thing to keep an eye on, is these stocks that are holding well above their 50, and not distance-wise, but basically everything's in track for the uptrend and did not correct as dramatically. What do we have going on here? We're getting a little bit of a breakout here at the 47 level. What is that? Yeah, it's pretty good. Pretty good. Yeah, a little bit over 500,000 shares per day. Not a huge, nothing's going, hey, I'm buying, but then we have to revert back to here. This press up here was done in a good volume, which tells us that buyers were coming in. LPNT. Okay. It needs to do some constructive up here before I'd be looking at getting into it. This was probably a lot of this move up here was partly due to the, what does LifePoint Health do? Who put this one in? Gino. Are they an insurance company? Or a care? Okay, yeah. I was going to say that, Gino just wrote that said that they're part of Obamacare, and I was going to say that this looks like the similar type move when the Supreme Court came and said that Obamacare was constitutional, or the way they were using it. This looks like a similar move to some of the other health insurance agencies or health companies. made a real big spike up, and away it went. But if you're still looking at this right now, it is way extended. I mean, it is about, here's the 20, and it got way above the 20, and so it will not maintain that. Now, it might drive sideways for a while before it heads up. If we finish with the candle that's on the weekly chart today, that is in there, that is a bearish Harami, which means its uptrend, I won't say is in danger, but it may be slowing. Everybody's asking about AMBA. AMBA is, here's what AMBA is doing. AMBA is putting in basically a pennant type pattern. Don't do that. Basically a pennant type pattern down along here, and it's going to break either up or down. Which way does it move? And until that time comes, it is holding the 50. That's good. At a huge upturn over here, where it held the 50, and so the market is not cooperating to send it higher. AMBA's got a lot of it's got earnings coming up in September. So yeah, in September. So it's got a long ways to go to earnings, but it's trying to see what it wants to do. It is just basically small volume and running sideways. So you can draw those trend line, these flag lines in, and if it breaks to the downside, then we're probably going back down here to about the 85 level. So right now it has not revealed its hand. And Dorothy, that should help with the question you just asked regarding about buying AMBA. Okay, Palo Alto Networks. It's getting a pretty nice rebound. However, look at this over here. This rebound that's currently ongoing is in decreasing volume. So this would be considered a weak volume wedge up or flag up. And so just keep your eye on it, because what we may get is one of these and those type of patterns where the volume is not participating is somewhere we get just a little wedge up here. Can't quite make it back to its previous high, and then we roll over and go. Again, earnings on this are in September. Let's see, MBAP. Yeah, so do we do cyber yet? I thought we did. No, we didn't. Folks, cyber now is basically in at least a short-term downtrend. It came right back up to this level of resistance made by these former lows, and it is running into problems, and it may just turn back around. If it does break out, look for it around the 50-day moving average. I would be looking for cyber to actually potentially short going forward. V. On a side note, did you know that Costco is ending their relationship with American Express and are going to be basically, the reason I say that is they're going to open a new relationship with Citibank Visa, I think. I think it's Citibank Visa. And so what we got going on here, Deepa, is we have, currently a downtrend, short-term downtrend, gradual downtrend in place, lower high, lower low, lower low, and a potentially lower high going on here. And it's, as you can see, the 50-day has been hammered over, the 100-day is being hammered over. However, on the weekly chart, looking over here, it has found its support down here about 66.55. And I'll be paying attention to what's going on here with the true strength And for this whole meandering sideways here, as you can see, there has been no, real strong momentum shift on it, from a weekly standpoint. So, okay, folks, I am gonna basically call it a day, and go get ready for the Bay Area Moneymakers meeting, which is tomorrow at 9 o'clock down in San Jose. I hope you have a really great weekend, and be looking for that new tech tip that should be recorded and up sometimes later today. And I will. It will go to the website or to the YouTube channel. And if you want to get notifications of whenever a new video is posted to the YouTube channel, just sign up as a subscriber there. That's free. And if you like the videos, please leave a couple of comments. Really appreciate it. So have a great weekend, everybody, and God bless.